Okay, you guys, we're now going to wrap up exercise 2-12. We're going to do instruction 2. It says prepare the necessary closing entries at December 31, 2016. Well, remember, we'll close our revenue and expense accounts in separate entries to income summary. And then we'll close income summary in a corporation to retained earnings. Now, if the corporation had dividends that year, the dividends account would also be closed to retained earnings. So we'll start. This is instruction 2, but we're going to date these December 31, and this is, of course, 2016. Okay, our revenue account is sales revenue. It has a credit balance. So to close it out, it has to be debited. For the amount of its balance, which is $800,000. We're going to close it out to an account only used in the closing process, income summary. And we'll credit it for the balance of the revenue account, or the total of the balances of the revenue accounts if there were more than one. In this case, that's $800,000. Okay, with our second closing entry, we want to close out expense accounts. They all have debit balances, so to close them out, they'll all have to be credited. The account to debit is income summary for total expenses. We can pick that up from the previous video, from our total plus interest expense. But I'm just going to add them together here. Equals $480,000. Cost of goods sold, plus $120,000 for salaries expense, plus $30,000 for rent expense, plus $60,000 for depreciation expense, plus $4,000 for interest expense, plus $5,000 for advertising expense. I just totaled all of the expense accounts and their balances, you guys. All right, now we'll credit each one for the amount of its balance. The order you go in here is not important. I'm just going to start with cost of goods sold. $480,000. It's a debit balance, so we credit it for the amount of its balance. It closes it out. Then we'll do salaries expense. $120,000. Rent expense, which is $30,000. We always indent, of course, for the credits. Depreciation expense. Wow, look at that! I typed and talked all at once and didn't screw up. Our depreciation expense is $60,000. Interest expense is $4,000. And advertising expense is $5,000. Alright, now that I've got them all listed, I'm just going to try the sum function and make sure this comes back to $699,000, because I could have typed in something incorrectly. I'm going to go here, delete that out, make sure this comes back to $699. So, okay, now with the first closing entry, we zeroed out our revenue accounts, transferred the balance from our revenue account in the income summary. With the second closing entry, we closed out all of our expense account balances and transferred their balance into income summary. With the third closing entry, which happens to be the final one here because this corporation's didn't have any dividends for the year, we want to close out income summary. Well, it has a credit for $800,000 and a debit for $699. The credit is larger than the debit, so to close it out, we need to debit the account for the amount of its balance. So we're going to debit income summary. We know we need to debit it to make it zero because the balance is on the credit side, right? We have a credit for $800,000, a debit for $699. It's equal to 800 minus 699,000. So we'll debit income summary for 101,000, which zeroes it out. We've got 101,000 and 699,000 in the debit column, 800,000 in the credit column. Let's go to zero it out. The account to increase by 101,000, as you saw on the balance sheet, is retained earnings. Remember, it's increased by net income. Retained earnings is a shareholders or stockholders equity account. It increases on the credit side. $101,000. Okay, you guys, that takes care of exercise 2-12. If you have any questions, please be in touch.